Hello, everyone. It's so good to have you here. I'm Trish Regan. I'm with my colleague from 76 Research, Rob Hordon. Rob, good to see you as always.
Yep. Great to see you again, Trish.
We got some breaking news. We've got Kamala Harris out with her new economic plan. And all right, guys, it's not pretty. Let's start first. In fact, it's so not pretty that it looks a little like Nixon, which Rob is going to tell you about. But first, hear it from her. She wants to put in price controls.
As Attorney General in California, I went after companies that illegally increased prices, including wholesalers that inflated the price of prescription medication, and companies that conspired with competitors to keep prices of electronics high. I won more than $1 billion for consumers. So believe me, as president, I will go after the bad actors. And I will work to pass the first ever federal ban on price gauging on food. My plan will include new penalties for opportunistic companies that exploit crises and break the rules, and we will support smaller food businesses that are trying to play by the rules and get ahead. We will help the food industry become more competitive because I believe competition is the lifeblood of our economy. More competition means lower prices for you and your families.
Oh, I mean, I'm kind of blown away. Rob, on the one hand, she's like, I'm going to make sure that nobody charges above, what I say they should charge. And then simultaneously, it's going to inspire more competition. I mean, obviously, no one should be in a monopoly situation. Nobody should be conspiring with one another to make sure that prices are set in any particular way. But that's actually not what's happening. I know you and I have done some research on this. It's worth you walking everybody through because we've looked at the lack of profitability actually from a lot of these companies. And I also know that you have some thoughts on her being kind of Nixonian in her approach. Tell us what you think.
Yeah, you're right. It does harken back to 1971 when Nixon, implemented this failed economic policy of trying to introduce wage and price controls. And we were just talking about it. Ironically, or kind of almost comically, Don Rumsfeld and Dick Cheney were the ones actually in charge of implementing those. But they learned from that experience. It was horrible policy. This was 1971 when they were at first introduced, and we had a decade of serious inflation, until the Reagan administration. So they don't work. Everyone knows they don't work. And it's really kind of strange to see this resurrection of, failed 1970s economic policies when it's really widely understood they're counterproductive. I would say specifically with respect to food retail, that's actually a sector I know pretty well. I covered that sector, back in one of my old firms. We had very large investments in some of the major food retailers all over the world. And that is an intensely competitive part of the economy in the US, globally. Just think about it. I mean, how many supermarkets, grocery stores do you have in your own town? They don't really have the opportunity to, just kind of randomly jack up prices, in a way, and then you'll keep shopping there. It's really an extremely competitive sector. We did the analysis back in March, over that 3-year period of rising inflation, the first 3 years of the Biden administration, we saw falling gross margins in 9 out of 10 of the major, US retailers. So, what they're doing is they're trying to deflect blame, for the real causes of inflation and sort of pin it on bad corporate actors. And, maybe it works as a political strategy, but it's just not supported by the data we even see the New York Times, I think, today kind of gently highlighting that in an article.
Yeah, look, I think everybody knows that. Earlier on the show, I was showing a clip from CNN in which, by the way, I just want to put the name of our company up, 76research.com, guys. So I'll just add that to the screen so that people can see. And, I encourage everybody to go there and, if nothing else, get the free stuff, but hopefully you sign up for a model portfolio. Hopefully you get all the model portfolios, which would make you one of our founders. So you could sign up for Founders Club or even the 76 report, which is sort of the low level, if you would, not low level, because this is really, really, really good research, but the cheapest level for you to get in on all of this. But, even the New York Times is sort of saying like, this doesn't work. It is CNN saying it doesn't really work. I mean, it's probably MSNBC thinks it works, but I would just say that it's fascinating that we can look back in time and look, price controls have been tried all over the world at various different times, but here in the US, you can think back to the 30s, you can think back to, interestingly, the 70s, right? And as you said, Nixon, and it was run by none other than Dick Cheney and Donald Rumsfeld. So quite a duo that tried this. And it won't work because ultimately free market capitalism really is the foundation of everything. Look, Donald Trump out speaking today, giving his own sort of press conference, if you would. And actually, it was just yesterday afternoon, he was saying, like, this is a problem. Like, her economic policy is pretty devastating. Now, I hope we don't go into anything like 1929, but he's somewhat worried that she is casting a rather difficult and bad light on what could be the future.
You don't have to imagine what a Kamala Harris presidency would be because you're living through that nightmare right now, and it is a nightmare. It's a nightmare. And you're going to stop inflation, but we're going to have a crash, and we're going to have a crash like a 1929 crash if she gets in.
Yeah, so he's clearly upset, Rob. Again, Kamala's presenting this as opportunity. This is going to be an opportunity economy. Again, it sounds good, but we got to get into the reality of what she's talking about. Let me play her for you. Here she is moments ago unveiling this whole spectacular boondoggle.
Together, we will build what I call an opportunity economy. Key to creating this opportunity economy is building up our middle class. It is essential. Essential.
Rob, thoughts on that? Again, sounds good, right? But in reality, what are we really talking about?
Yeah, I think what their understanding of opportunity economy is spending money, enlarging the federal government or distributing money to, the favored groups within the population. So whether it's forgiving student loan debt or giving $25,000 to first generation home buyers, which to me is that in particular, that aspect of that proposal is particularly problematic in that, it's like first time home buyers, if their parents didn't own a home. So maybe if they're new to the United States, as an immigrant family, then you get special tax treatment. But if your parents, happen to own a trailer or something, you don't get the $25,000. It just seems like now
JD Vance, you don't qualify.
Yeah, exactly. Because maybe his mama owned the small house in West Virginia, but. It's like now.
No, it's not fair. It's just, it's kind of like it's a version of the college thing, right? All over again. So if you're first generation, you never went to college before, now you get bumped to the top of the list and you're penalizing everyone else, regardless of, whether their parents went to community college or Harvard. It's like, it just doesn't even make any sense. Arbitrary rules. The other thing I would just say is it feels very discriminatory. And I think about some of the work that Stephen Miller did when his law foundation actually supported a lot of the farmers that were not African American because they were giving all the subsidies. This was during 2020 after Trump had left office, and they were making sure that the farmers that were minority farmers were being paid first. They were at the top of the list. And Stephen Miller was like, wait a second, like you can't discriminate based on color. And so there's these different various ways that they're going about discriminating against everyday Americans that I think could be really problematic.
Yeah, that they had that overtly kind of racially based policy, and now here with this first generation homeownership, one wonders if this is part of that equity agenda, but they're using kind of a proxy for what they're really trying to, where they're really trying to steer the money. So what this pattern you see with what Kamala's campaign, it's like, you're giving these like targeted giveaways to certain groups, whether it's folks with student loans or, and we even see it to some extent with the tax on tips, right? It's sort of like buying off the service industry workers. I think with tips, it's a little bit more defensible because there's different forms of income. We treat capital gains differently from wage income. So you can make an argument there. But it just seems like the policy, their idea of expanding the middle class is to, give more money to favored groups. But but here we are back at that core problem of where does the inflation come from? The inflation comes from the government, running deficits, spending too much money. Elon Musk kind of made this basic point earlier this week in Twitter, right?
Or he made it today. I know I retweeted him because he made a very strong and good point about this. But you don't need to be Elon Musk, who's extraordinarily intelligent or a rocket scientist or anything to be able to figure this out. In other words, it's pretty basic. When you keep printing money, as the Federal Reserve did for way too long, and then you're in this situation where not only is the Fed printing, right, but you get fiscal and monetary policy working together because you also have the Biden-Harris administration doing what it did, which was really kind of outrageous. I mean, more than double what Barack Obama had done. And all of that spending and all of those giveaways, the majority of went to state and local governments. Everybody's like, me too, me too. Everybody has their hand out. And you flood the economy with all those dollars. And everybody stays home because you extend unemployment benefits and you extend them. So nobody has to go to work. Of course, you are driving an engine of inflation. And it's not that hard to figure out. But I look at this and, there are people that accuse Trump of being populist. If you ask me, this is like pure on populism that Kamala Harris is enacting right now. Economic populism.
Yeah. I mean, I almost hesitate the word populism might be not pejorative enough to describe it.
It's communism. We're talking price controls, giveaways for favored people. You get your $25,000 to a house. Here you go. Just don't build a big house. You only get 2 bedrooms and 1 bath.
Yeah. And if you really want to solve the cost of living problem with housing, it's like get interest rates down, right? So solve the inflation problem generally so that the Fed could be in a position to normalize interest rates. But so long as, you keep running fiscal policies that feed the inflation problem, the Fed's not going to be in a, long-term interest rates are going to stay up and mortgage rates are going to stay high. And the cost of building materials is going to stay high. So it's all about supply. It's all about what does it cost to build a new home? That's what's gone up so much. Or when you have 20% inflation, that feeds through to building materials and you've got, 20% higher construction costs.
It's kind of simple.
Yeah.
It's actually amazingly simple. But they run the risk, I think, of doing some pretty, frankly, dangerous stuff if they were to get it through. And, look, they absolutely could. And I think that's one of the reasons why this election is so important. All that said, right, there's reason to be worried. I think gold went up today. If you're somebody who's worried, I do, again, encourage you to go check out our basic income builder portfolio as well as the inflation protection portfolio, because those are sort of 2 stable rocks, 10 to 15 stocks in each one of them that have been hand selected and a ton of diligence done on by Rob and myself. Rob, just, I'll sing your praises for a little bit because, if people don't know me, I've been in financial journalism for the last 20 years and started my career actually on Wall Street. But Rob, for the last 20 years, has been on Wall Street picking stocks and has run billions of dollars and mutual funds and just had a terrific track record. And thus far, we have had an enormously great track record at 76 Research. I've put the URL up there, 76research.com. I encourage you guys to go to it. I'll even put it in the chat. So go check out 76research.com, guys, because there's just so many good ideas. But again, the inflation protection portfolio, as well as the income builder portfolio, I think are really sort of those rocks that you want in light of some of the headwinds that could be coming our way. All that said, there's something really exciting going on too. And that would be, in my estimation, the opportunity in the tech sector. Definitely more volatile, but I got to tell you, Rob, I called Rob actually the other day. I had to go to the Apple store to get one of the kids' computers fixed, and my son had been just dying to see this Apple Vision Pro, and somehow he signed us up for it. So I go in, and he's so excited. I'm like, yeah, whatever, right? Like, I got to put this thing on my head and look like an alien. I was blown away. I was absolutely blown away. Rob, right? I called you, and what did I say? Gosh, I feel good about technology because I actually think there's so many ramifications of this stuff that like this is actually going to be huge in ways that people have not even thought about. This is first generation Apple Vision Pro. Other companies are trying to do this too. I mean, you've got the metaverse, right? That's coming along. And what did Facebook rename itself? Meta. So I think that Zuckerberg, obviously a smart guy, is a big believer in this too, and many, many more. It was incredible. It was just incredible. It was like a 360 experience. You could look around. I mean, I did get a little vertigo after I took them off, but you're looking around and it's like you're there, you're in stuff. And then they showed this 8K video, 8K. So think about this. Like I shoot in 4K here in my studio. Maybe you're 1080 Pro, Rob, where you are, but I think I have a 6K camera somewhere around here that I could dig up. 8K is not that far away, which means you guys could be like right here with Rob and me, physically like right here. It would feel that way. It is sort of eerie, but you can actually be in a room with someone. I almost can't describe this, but I was thinking about all the repercussions of it. And it's just enormous. It's going to change how we communicate with each other. It really is. Beam me up, Scotty, right? You can be somewhere with someone, although you're not really, which means I still think live experiences have a leg to stand on this environment. I'm going, wait a second. Like for anybody who thinks that semiconductors are overvalued, I get that there are headwinds there. And I get that maybe somebody wouldn't choose NVIDIA. I know that we haven't chosen it, for example, in our growth-oriented American resilience portfolio. But Rob, like they're going to need a lot of chips. They're going to need a lot of semiconductors. They're going to need a lot of space for the semiconductors. I mean, it's incredible.
Yeah, AI, it's just incredible how much AI has become such an important variable now in the stock market overall. I would estimate, just look at the S&P 500 now. It's about over 30% just tech stocks. So there's 11 sectors, 1 out of 11, information technology is over 30%. The Mag 7 are over 30%. Actually, 4 out of the Mag 7 are not tech stocks. Technically, they get classified as something else. So, by my estimate, it's like half the market is really like in one way or another, like a more or less direct AI play. And then much of the rest of the market is kind of an indirect AI play. So AI is like the most important thing happening in markets today in the economy. Hundreds of billions of dollars are being deployed to build out our AI capacity. I think, with the audio, video, VR goggle experience you just had, but that's pretty incredible. But it's also like
it's one sliver.
It's like a little sliver of what is going on here between, because they're just more on the data and like the accessing big data and the ability to do all of this supercomputing for just a vast array of purposes, self-driving cars. And, if you listen to the experts and to the leaders in the area, they're all saying the capabilities that we have within AI are like, exponentially growing, So we're just in like the early stages of what's possible.
I see it. And I see it every day. Like, even in terms of, the thumbnails, for example, we don't use them, but I have colleagues that do. And you don't even need to submit a picture of me. Like AI will find a picture of me and create a whole thumbnail. And it's sort of like, wow, it's incredible. Like, it's scary too. I get it. And wasn't there a pretty big firm that just came out and kind of panned it and said, oh, it's not all that, blah, blah, blah. Some people were sending me this article. I'm like, well, it kind of is, but.
Over the last, we've had a little bit of a wobble. This week we had a bit of a recovery, but in the past few weeks we've had a bit of a wobble, particularly in tech stocks. And there's a bit of a concern now, kind of justifiably within the market that, are we in a bubble? There was a venture capitalist out of Sequoia Capital who kind of published a well-read note, kind of questioning if there's this, kind of revenue hole. Like, you've got hundreds of billions of dollars going in to build out the AI processing capability, but where's the beef, right? Like where are the applications? Where's the revenue? Elliott, the hedge fund, this was an article in the Financial Times. We got a hold of the letter, talked about it in the most recent 76 report. They took a very curmudgeonly kind of bah humbug approach to the AI situation and really likening it to the late 90s, the tech bubble, the tech and telecom bubble, and the massive overbuilding that went on in that era. And I think it's very much a concern. Are we overbuilding? Are the animal spirits, running too fast here? And are we overvalued in a lot of respects? And you look at a stock like Nvidia, kind of going to the moon. That's any value-oriented type investor will say, hey, I've seen this movie before. This is something to worry about. But on the other hand, these technological changes are very real, and the possibilities are somewhat endless. And, my attitude is you really just got to be very mindful of the risks, but think very carefully of like how you want to be positioned. And I'll give you an example. Nvidia, right? So Nvidia right now has 65% operating margins with growing revenues. They have tremendous pricing power because they're really like the only game in town in terms of these graphic processing units. Mm-hmm. There's some competition, but over time there could be. The history of technology is that, particularly in semiconductors, is that new competitors arrive, and you don't have that kind of window of pricing power, so that erodes. But the flip side is, if you think about that scenario, if GPUs get cheaper because there's more competition and it becomes more commoditized, and they're just going to get better over time, that just means there's more AI, right? There's more AI, there's more ability to deploy AI, that you can make more data centers because you get more GPUs for your dollar, right? When you invest, when a big hyperscaler like a Google or Meta invest billions of dollars in data centers, they can build bigger data centers, right? So like then there's a downstream effect. And this is similar to what we wrote about in the 76 report, where all those companies that built all that fiber capacity in the late 90s, that was bad for them. Investors in those companies lost out, but investors in other parts of the internet really benefited from that excess capacity.
Which is in part, and I'll just put this graphic up again for people to take a look at. You should go to 76 Research, 76research.com, because we actually wrote a special piece on this today, specifically on some of the things that Rob is talking about. But the other thing is, in terms of our American resilience portfolio, what we've tried to do is identify those opportunities around sort of not the NVIDIAs. By the way, you can get NVIDIA if you invest in the S&P 500, and be aware of that, right? If you're investing in the S&P 500, you are getting NVIDIA, which is pretty volatile. But there's opportunity, to Rob's point, in this space without actually being in NVIDIA, but looking at sort of the other players. And can we give any names? Is that kosher? I know that they're supposed to go, but I think that we did put out a note on one. I'll let you do. Can we talk about that?
No, I mean, we have a few stock ideas in the
digital really.
$1. You can see our four kind of stock ideas in the most recent 76 report. Use that code word dollar to subscribe. And we kind of walk through.
This is a generous guy. I did not know that was back on. I kept saying we need to do that for back to school at least. No, that's great. Yeah. $1. So you're right. You're going to get like 4 really, really big meaty ideas. So Code word
You'll have
dollar,
access to all of
DOLLAR.
several of our model portfolio ideas have been profiled in the 76 report. So for $1, you can sign up and read all about it. You can start with the most recent piece on AI if you're specifically interested in this topic. But I think look, if you own the S&P 500, you're going to own NVIDIA, and you're going to own the other major what they call hyperscalers, the companies that are making these big investments in AI. And these are great companies. They maybe they're somewhat overvalued, maybe they're not. If you own the S&P 500, you're going to own them in a pretty significant way. I think there are other companies out there that offer you other forms of exposure to AI that might have more subdued valuations,
Right.
And might not be as exposed to that risk of the possibility that we are in a late 90s style kind of overbuilding of capacity. But they would benefit from, this AI revolution is not going to stop, whether or not.
I would just say, so I tend to be, not to toot my own horn too much, but like I tend to be pretty on the news curve in terms of identifying trends, et cetera. I would say I was actually the first journalist, the first reporter to ever witness Bitcoin being used as legal tender. And it was happening at a nightclub in New York City. And I somehow got wind of this because I was really into Bitcoin, like back when it was $10. Okay. Like I was like, this is very, very interesting. And even philosophically, I remember actually talking to Carl Icahn about it. And he was like, wait, what? He'd been a philosophy major at Princeton, your alma mater, of course. And he was like, this is fascinating. I'm like, I know, it's really fascinating. And I'm getting into the legendary so-called Japanese guy that created the stuff and everything with him. And he's like, what? Anyway, I was there when they took the first legal tender of Bitcoin. I drove my entire crew crazy. I was at Bloomberg. It was a rainy night. It was like a Sunday night. And I made everybody go in and go see this. And I was like, this is history being made. And they're like, whatever. I'm like, no, you don't understand. And that's how I feel right now, all over again, about AI, ChatGPT, Perplexity, like all of these new incarnations of things that we are seeing, all of these programs where so much is being done. And sure, like it's a little bit scary. Bitcoin's a little bit scary too. But I tend not to be scared about these things. I get excited about them. And I look at it, again, everybody has a different tolerance for risk. Everybody. And you need to understand your risk tolerance. But, if you have a little bit of sort of on the side and you're willing to take these chances, I think taking informed chances, which is what we're offering people for $1, DOLLAR, use code word dollar. I think the first 2 months, actually it's just $1 a month and then it's $9.95. So it's actually really, really, really smart to do. But for that sort of opportunity to be in some of these places and in some of these stocks, I think is really smart long-term stuff.
It's just open-ended. I mean, look, there is valuation risk. Maybe it's overextended. We can navigate that, but it's like, you could have said the same thing 10 years ago and look at how all these big tech stocks have performed. So, being, kind of calling everything a bubble and being a big skeptic.
You don't make money that way.
What's that?
You don't make money that way. And by the way, look, hey, we like gold too. So in other words, you have safety. Right. Like, what did you say?
No, gold broke 2,500 today. It's at an all-time high. No one's really talking about it. There's so many other things to talk about. And interesting, it's in the context of Kamala's 1970 style Kamala economic plans, right? Like, now we, just like the 70s, we see gold pressing new highs. But yeah, gold, I think, isn't actually a really interesting, counterbalance to a growth portfolio, right? Because, okay, let's say this is a bubble. This is some kind of tech bubble like the late 90s. What happened after that bubble burst? Interest rates came down. We entered a recession, and that's a scenario where gold will do well, as it's no longer competing with like high interest rates, interest bearing securities. So you want to, and you can also own, in our income builder portfolio, we have a number of stocks that are would do well in a falling interest rate environment, in a more kind of recessionary, kind of type of scenario. And I think it does make sense to kind of balance, have a balanced portfolio, have your growth investments, have your AI investments, but then have good, solid investments that would be sensitive to other kind of trajectories in the macro economy.
Yeah, and I can't emphasize with people enough how important investing is. Not to get too political, but there was a big article in the Wall Street Journal contrasting the economic profiles of J.D. Vance and Governor Walz, Tim Walz. And J.D. obviously came from super poor circumstances. It's actually a great American success story, and not necessarily repeatable by everyone, but you really love a story like that, right? Because it's a rags to riches story, and he grew up super poor in Appalachia, and wound up at Yale Law School and was in the military and has a lot of money now because he's been a successful investor. And then you compare and contrast him with Governor Walz, who was a teacher, which is great, and then went into government, which is great, but he doesn't own his house. He doesn't own any stocks at all, like anything. He has a pension, I guess his kid's college education fund, but that's it. And I look at that and I'm curious because we want to be careful. Like I understand, not everybody can even afford to invest, but I keep saying you can't afford not to. Like, I'm sorry, you don't have a lot of money. Skip the latte, skip the cocktail out at the local whatever, and make sure that you take that money. Or if you're going to do that, like split the difference, have one cocktail and take the other money and put it in something that is going to get some return at some point in your life, because you don't want to be Governor Walz. You don't want to be Tim Walz. What's your take on that? I mean, what do you make? Because keep in mind, like the guy's been making six figures for the last however many years there. He was in Congress, now he's governor, and he doesn't own anything?
Yeah, it reminds me of like that World Economic Forum, like you'll own nothing and be happy. And maybe that's sort of what he's thinking.
Is that his strategy? But like, just to be clear, a lot of those people that say that actually have a ton of money in the bank, right? They can choose to not own their home because they don't want to be weighed down by earthly possessions, but they got a ton of money in the bank. He doesn't have that. He's got nothing in the bank. I mean, he's got a little, but not much.
I'm glad you
Just
brought
cash.
it up. It was a fascinating article. And, JD's portfolio, by contrast, was really interesting. He's in some crypto. He's got some real estate. He's got venture capital interests and equities. And, and he and Usha, I think they're like 40 years old, right? So they're on their way, or they've been, carefully building up their portfolio. But okay, so he was a civil servant and a social studies teacher. My mother's a teacher. I come from a family of like kind of civil servants and teachers. Actually, what they invested. They've always been invested. Now it's worked out quite well, right? And growing up, I've always known like that's just what a responsible adult in American society kind of does. Is you don't have to be rich, but you have to save your money and you have to intelligently invest it in a way for the security of your future, your family, right? So I see like three possible explanations why Walz has basically no assets outside of his pension. Either he's financially illiterate, which is very alarming for someone who could be, a heartbeat away from the Oval Office. It really has a very crude or basic understanding of economics, which is fine if you're a high school football coach. You don't need to have financial sophistication, but if you want to be the president of the United States and lead the free world and run a 24 trillion economy, you probably should have some level of sophistication. He's financially irresponsible, which also, doesn't really bode well for a potential, president of the United States.
And you say irresponsible because he's never saved anything.
Well, because he just doesn't have
for
like
his future. Mm-hmm.
Yeah, I mean that he's neglected. It's not that he needs to be rich. It's just like he hasn't even like set up accounts, right?
There's nothing.
Like it's like someone who doesn't have a bank account and just puts cash under their mattress or something. It's like it's fine, but it's like you shouldn't. That's not presidential. That's not a leadership level kind of personality. And then maybe the worst thing though is like maybe he doesn't actually believe in in American capitalism, right? Like maybe he doesn't believe in the stock market. Maybe he doesn't believe in ownership of stocks and equities, and that the whole idea that that's individuals should have that, like he just wants to rely on his pension and his state salary. And that might be the most, to me, like that's possibly the most jarring explanation for his lack of assets and a portfolio and kind of financial planning, is that he's morally opposed to it, or he thinks it's a conflict of interest. He thinks it's a conflict of interest to own U.S. equities as an American politician. It's one thing to be Nancy Pelosi, swinging your portfolio around and trading on inside information, perhaps, but it's another thing just to own a mutual fund.
Yeah, I mean, agreed. One of our viewers here, Don Bacco, who's fairly sophisticated in finance himself and used to trade on the Chicago Mercantile Exchange. I think I got that right, Don. He's laughing and saying, just to be clear, he's an assistant coach. Bruce Hodge saying maybe he has gold. I don't think he does. I mean, unless he's got some gold coins in the basement, I don't think he does. Like I think actually Rob's onto something, which is just alarming, because he seems to lack the sophistication to even just open up. I mean, they make it easy nowadays, guys. You go to Chase and JP Morgan Chase or Citi or Wells Fargo, any of these places, right? And you can tack on a brokerage account, and guess what? No fees. You can buy and sell and, do all your trading online with no fees. So it's pretty easy to do, but Tim Waltz, for whatever reason, is making a decision. And I guess he's either making a decision or he's just really poorly sort of, I don't know quite the right word. I want to be generous here, because I agree with you. Not everybody you don't have to make a lot of money. You don't have to save a ton of money, but do something for yourself and your family and your future. And he's not doing anything. I got to ask you about the Fed. I'm sort of conflicted on this, because on the one hand, I guess my bottom line on the Fed is they always get it wrong. Their timing's always kind of off. And now they're talking about a rate cut in September. A lot of people thought they needed to do a rate cut a while back because the economy seems to be slowing. The danger, of course, with that rate cut is that you've already got all this inflation. I mean, granted, they're saying, it's 2.9%. It's the lowest it's been since 2021. I mean, I was looking still at the chart. Like, it's massive compared to where it was in 2017. But, you want to be in that sort of sweet spot, maybe 2.5%. That's what the Fed is traditionally looking at. They're getting there, but they're not there yet. So how do you cut rates?
Yeah, I mean, look, but like 10 days ago or so, we were fretting a bit. We thought the whole economy was about to fall off a cliff. I think it turned out, in retrospect, that was really, a lot of that was driven by the unwinding of that Japanese, carry trade with the interest rate hikes in
By the way,
Japan.
For the record, that's when I was buying. I have nerves of steel. I also bought in March. When was it? March 2020, when the whole country was shutting down and everybody was freaking out, and CNN thought this was like a plane crash and the market was tanking 2,000. Because to me, when everybody kind of loses their, that's when you go in for longer term, of course. But continue your thoughts. So it was the Japanese carry trade.
But it was like the bad jobs report, and then the sort of like simultaneous, the next Monday with the unwind of this Japanese, the yen carry trade, which we wrote about a little bit in a quick take. Now, over the past week, now we're kind of back into kind of soft landing scenario. So interest rates, long-term government bond yields, the 10-year Treasury yield, that's like, now we're back to like 3.8, 3.9. So it's down quite a bit from a month or two ago, or, I guess end of April was the peak. Look, I think people are feeling pretty good at the moment about the inflation data and that it's coming down, but we'll see, how, no one's really gotten this right. And, as the dollar kind of softens against other major currencies, like the yen got really weak and now it's strengthening again because Japan's raising rates. So that's propped up the dollar, we've, and sort of the cost of imports. But, that
I know, I was just in Europe, as you know, and the viewers know, because I was there for some 3 weeks. which was interesting with the kids.
Well, I was relieved.
My husband was like, okay, I'm only doing one of these weeks with you on. So I was bravely, traipsing through Europe with the 3 kids. What?
I thought the EU thought police may have detained you or.
I know. I was getting worried. I got to be careful, right? I was broadcasting from the EU. Anyway, they have no First Amendment over there. But what I noticed was it was fantastic. It was like my first time really feeling like my dollar was strong, but the ECB had just cut again when I was over there. And, Donald Trump talks about a strong dollar policy. Everybody kind of talks about a strong dollar policy. We want to have that. Simultaneously, you want your dollar not too crazy, right? Because you want your global companies that are based here in the U.S. to be able to sell internationally. But it just felt really good, right? You could go in and get a cappuccino for, I call it $1.36, but that's not perfect because it's like $1.10 to the euro right now. So it's a little bit more than that, but it's like 1.36, and the kids would automatically translate the euros into dollars, and it was easy for a change as opposed to going, oh my gosh, it's like twice as much, or 50% more. Yeah. I can remember like always having to double everything in pounds at one point because the British pound was so much more than dollars.
And a lot of that has had to do with high interest rates. U.S. interest rates have been very high. And like we saw with the yen carry trade, in Japan, interest rates are like 0. And that led to a lot of, people were borrowing in yen and investing in dollars. And that led to yen depreciation and, so in other currencies as well. So, that's part of the reason inflation is coming down, because the dollar has been so strong due to interest rates. But if now U.S. interest rates are coming down, that's going to remove that, that benefit, right? And then maybe, we get back towards a more inflationary trajectory. Certainly if Kamala wins and starts implementing, damaging price controls, then all bets are off in terms of, what the long-term inflation outlook looks like.
Yeah, I mean, the EU, just to get back to that for a second, in part because, again, one of our viewers, it's good to see everybody. We've got a big crowd tuning in. Don's on this particular broadcast, and he lives over in Europe now. So yeah, I get to know the viewers. It's really, it's a very unique experience, completely unlike what I used to do, and I love it. But anyway, when I was in Europe, I did get this sense that people are frustrated, right? So you look at the Irish economy, and it's killing it, absolutely killing it, doing so much better than, say, Italy. Italy, it's sort of tragic because I met so many young people there that were fluent in English, that were really well educated. But, one of the women I met, she was maybe in her late 20s, who worked at the hotel, and she told me they make €6 by the time the taxes are out. They get like €9, but then they take taxes out, so she gets €6 an hour. She's like, nobody can get married, nobody can, you can't start a family. You're living at home well into your late 30s. It's really, and you see it reflected even in the birth rate. And we went to Ireland, and Ireland's actually, it's just phenomenal. And you see all the building that's going on there, and the quality and standard of living is so much better than you see, say, in Italy or perhaps in Spain or in Portugal or Greece. And I just kind of question at what point did, people in Ireland say, hey, we kind of got our act together. They put in a lot of really smart economic policies going back all the way to the late 60s, actually, which then once they got through some of their challenges, the troubles, et cetera, really helped lay the groundwork for a thriving economy. And they've just been so successful because of the tech investment there. And it's resulted in such a better standard of living. So at what point do people in Ireland or people in Germany or, elsewhere say, like, we're kind of sick of it. Like, we're having to support the rest of you Frenchies over there in France, which, by the way, is not doing as well. It's doing better than Italy or Spain, but you compare and contrast it with the likes of Ireland, forget it.
Yeah, no, I've had the same reaction when I visited Europe. It's like all of this kind of wasted potential. You have these like highly educated people who would be like thriving in the United States and polished and verbal and sophisticated, and they're working in like service jobs. Their economy is just not as, not as many operators. So they have big kind of more socialist style. You know what? Like, what a lot of it has to do with is like these wage and price controls, and like in France, it's like you can't fire anyone, which is great if you don't want to get fired, but that's not great for businesses, new business creation, or for new hiring. You're not going to hire someone who you can't get rid of. So it's like a very sclerotic system. They've had slower GDP growth. They have smaller economies, despite the fact that they have like a very educated and kind of high potential population. They've gone nowhere. They've gone nowhere with tech, right? Like, look at all of the big tech companies are basically in the United States. China has some, but in Europe, there's literally a couple of important tech companies. So all that talent, all that education, all those beautiful cities, what do they have to show for it? And now you've got these kind of social issues with their immigration problem, and it's arguably more acute than what we're dealing with here, and the divisions are more severe politically. I mean, in the UK, people getting thrown in jail for expressing dismay about the immigration problem.
Unbelievable. I'm blown away by that. It's a very, very different way of living. And I think that they've kind of, what I don't want to see us become, Rob, I don't want to see us become Europe. So when I hear price controls, when I hear $25,000 for new homeowners, and we're going to sweeten the deal if you happen to be a first generation homeowner, and we want to forgive everybody's college loans and all of this stuff that has been tried before and has resulted in stagnant economies. Although I would say, like, our taxes are way higher than they are in Europe. I mean, I was blown away. In Switzerland, the top rate is 22%. So they actually amazingly don't even have as high taxes as we have here in the U.S. Like, we got that honor. Thank you very much. Which is why it's important. Like, people, I get it. Like, Trump is not everybody's cup of tea, but when you look at the policies themselves and you look at tax policy, for example, which I'm keenly just interested in and always have been, he's just had the most sensible policy in my perspective, and in sensible policy in terms of generating more growth for our economy, and more growth means more opportunity for everyone. And shouldn't that be what it's about, as opposed to, okay, well, this group can have opportunity in this group because we think you've been underserved, but you guys, you're done. I think it's a very dangerous dystopian kind of view of things that she's potentially putting us into, and let's hope that we don't go there. But hey, we'll see. Congress has something to do with it too. So, it's not just the Oval Office. I think everybody's got to stay focused on everything, including all of those races. From a market perspective, though, I mean, I think long term, it's hard to bet against the US of A. I mean, you just can't. Like, I would never bet, because where else are you going to go? Canada? China? I realize they all, China and Russia, they're starting a barter system apparently this fall because of sanctions with Ukraine, et cetera, and with us. And, they can't trade together if they're going to still trade with us, China, that is. And so now they got a barter system they're setting up. Basically, we're driving Russia straight into China's hands. They want some other system, right? They don't want to be dependent on investing in the U.S. economy and treasury bonds, but I don't really know where else you'd go. And maybe that's 40 years out, 50 years out, 100 years out, I don't know. But in the sort of here and now, the present, I really like the USA. In fact, I'll just share some information about my own portfolio. I used to actually have a much more, going back quite a few years, much more diversified in terms of emerging markets and global stocks. And I don't know, maybe 8 years ago or so, I was just like, no, why? Yeah. I actually really, there's some diversification in there. And if you're in a multinational, you're obviously getting that diversification. But I just really liked U.S. companies and feel that this is the best opportunity. And by the way, it was the right call.
Yeah. And look, I've always been a global investor and worked on international funds and sort of know my way around some of these developed and emerging, stock markets. And what's really interesting is over the last 10 years, just in terms of the US share of the global equity market, it's now something like 65%. So, it wasn't always like that, but it used to be below 50%. So it's like, just in terms of, in the same way that like tech is overtaking the US stock market, the U.S. through tech really is taking over the global stock market. So it's almost becoming irrelevant, whether you own foreign stocks. It's like you can own some Europe, you can own some Japan, okay, emerging markets, pick your spots. But it's like the opportunity set itself is now, $2 out of $3 in global equities is U.S. anyway.
Yeah.
And, within U.S. stocks, as you pointed out, these are international companies. So you're getting access to those economies, but you're doing it through, owning U.S. corporations, the U.S. legal system. Hopefully it stays flexible and our legal system stays stable and secure the way it's been in terms of protecting property rights. But so it's like you're
we
not
can
really
save that sort of pessimism for another day. Yeah, I mean, it's got to. As much as Kamala might like to think otherwise, I still think, look, we got a constitution, we have a Supreme Court still. We are the United States of America, and we're still like, it's the number one place everyone wants to be. They're coming here for a reason, for sure. Hey, Rob, I'll talk to you again over the week and over the weekend. But I just want to remind people to use code word dollar, DOLLAR. We're just talking about the US dollar. Go use code word dollar. You can get these 4 stock picks actually for just $1. It's just $1 a month there on 76 Research, introductory for the first couple of months, and it goes up to $9.95. But I'm telling you, this is the best investment in the here and now that you can probably make. So it's a good chance over the weekend to actually do some thinking. If you're already invested in the market, great. Perhaps we can sort of help refine some of the ideas that you have around the market by reading this research. And so I encourage you to do that. 76research.com. Use code word dollar. Listen, guys, don't miss out, okay? Because we're doing really well. We're beating the market. And some of these stocks, I mean, we got to pull these numbers, Rob, because some of them have just soared since we recommended them. So, maybe that's something we can save for sometime next week. We'll just show people some examples of some of the things, maybe not the actual names, but we can give them some ideas of just how successful we've been. Thank you so much for tuning in. Have a wonderful weekend, everyone. We will see you back here on the 76 Report next week. I'll see you on the Trish Regan Show. Make sure you go to 76research.com. Remember, code word dollar. See you soon.